Stop scrolling for a second. Gold just crossed $5,000 an ounce. And no, this isn't about celebration. It's a warning. When gold moves like this, it's not reacting to hype. It's reacting to stress inside the financial system. Inflation, debt, interest rates, and global uncertainty are all sending the same signal. The real question isn't why gold is rising. The real question is, what does the market know that most people don't? This is a funeral. It's the funeral of the greatest financial lie ever told, the lie that paper currency has value, that central banks can be trusted, that the US dollar will always be the world's reserve currency. That lie is dead, and what's rising from its grave is a truth that's 5,000 years old. Real money wins. Paper money dies. Every single time. Right now, as you watch this, gold is trading near $5,000 per ounce. That's not a typo. $5,000 for a single ounce of metal. And if you think this is just another market rally, if you believe the talking heads on CNBC who are scrambling to explain this away with sanitized terms like safe haven demand and market volatility, you are dangerously, catastrophically wrong. What we're witnessing is the beginning of the end of the fiat currency experiment. This is what happens when 50 years of money printing, central bank manipulation, and government fraud finally collides with reality. The dam didn't just crack, it exploded. And the flood that's coming will wash away every dollar, every euro, every piece of paper currency that isn't backed by something real. I'm going to show you exactly why gold is exploding right now, why every major bank from Goldman Sachs to J.P. Morgan is quietly telling their wealthy clients to buy more, and most critically, why you have maybe days, possibly hours, before this window of opportunity slams shut forever. Because what's happening isn't just about gold hitting a new record, it's about the total collapse of confidence in the system. And if you're not positioned correctly when that confidence breaks, when the masses finally realize their savings are worthless, you will lose everything. So, listen carefully. What I'm about to show you could be the difference between financial survival and complete economic annihilation. Let me show you the data that makes central bankers wake up in cold sweats. Gold hit $4,188 per ounce on January 23, 2026, an all-time record high in human history. But here's what the mainstream media isn't telling you. This represents a 77% gain in just 12 months, 77% in 1 year. While your savings account paid you what, 0.5%, maybe 1% if you're lucky, while the stock market delivered maybe 10% with wild volatility that kept you up at night. Gold, the barbarous relic that every financial advisor told you was dead, delivered 77% returns while simultaneously protecting you against the collapse of the monetary system. But let's go deeper, because the real story is even more shocking. 1 year ago, gold was trading around $2,800 per ounce. Financial experts were telling everyone that gold's bull run was over, that you should sell and move into tech stocks, that precious metals were finished. Those experts were catastrophically wrong, because what they didn't understand, what they still don't understand, is that gold isn't rising because it's becoming more valuable. Gold is rising because the dollar is dying, the elevator isn't going up, the floor is falling out from under you. Look at what happened in just the last 2 months. Gold surged from $4,200 in November to nearly $5,000 today. That's an $800 move in 8 weeks. That's a 19% gain in 60 days. And this rally happened despite the Federal Reserve's desperate attempts to maintain the illusion of dollar strength, despite every central bank governor in the world telling you that inflation is transitory and under control, despite coordinated efforts by every major financial institution to suppress gold prices and keep you trapped in their worthless paper assets. The market is screaming at you. The alarm bells are deafening. And yet most people are still asleep, still believing the lies, still thinking their paper wealth is safe. Now here's the number that should make your blood run cold. In the last 12 months alone, gold has gained $2,171 per ounce. But do you know what happened to the purchasing power of your dollar in that same period? It collapsed. Every gallon of gas you bought, every grocery bill you paid, every utility invoice that arrived, all of it cost more. Not because things got more valuable, but because your currency got weaker. And here's the nightmare. This is just the beginning. Because what we're seeing now is the early stage of a currency crisis that will make the 1970s look like a picnic. The patient isn't sick, the patient is flatlining, and the doctors, the central bankers, are out of medicine. Let me show you something that proves we're not in a normal market cycle. We're witnessing what I call the impossible signal. And if you understand what this means, you'll realize why time is running out. Gold is at all-time highs, but so are stocks. The S&P 500 is near record levels. The Nasdaq keeps climbing. And gold, the ultimate safe haven asset, is exploding upward at the same time. In a functioning economy, this should be impossible. Let me explain why. When stocks rise, it means investors believe in economic growth, corporate profits, and a stable future. They're willing to take risk because they're confident. When gold rises, it means investors are terrified. They're fleeing to safety because they see danger ahead. Currency debasement, inflation, systemic collapse. These two signals are supposed to move in opposite directions. When one goes up, the other should go down. That's how markets have worked for centuries. But right now, both are rising together. And there's only one historical precedent for this pattern: the death of a currency. Go back to Weimar Germany in 1923. The stock market exploded upward in nominal terms. People thought they were getting rich. But the Deutsche Mark was collapsing. A loaf of bread that cost 250 marks in January cost 200 billion marks by November. The stock market wasn't going up. The currency was going down. The same thing happened in Zimbabwe in 2008. The stock market went to the moon. People celebrated. But the Zimbabwean dollar became worthless. You needed $1 trillion note to buy a bottle of water. We're seeing the same pattern right now in Argentina, in Turkey, and Venezuela. Stocks rise, gold rises, and the currency dies. This is what the Federal Reserve doesn't want you to understand. When both stocks and gold are hitting records simultaneously, it's not a sign of economic strength, it's a sign of monetary death. Every asset denominated in that currency is rising, not because the assets are becoming more valuable, but because the currency is becoming worthless. And here's the critical insight that separates you from the masses who will lose everything. Stocks can go to zero, companies can fail, earnings can collapse. But gold? Gold has been money for 5,000 years. Gold has survived the fall of every empire, every currency, every financial system that ever existed. Gold is the only asset that has no counterparty risk, that doesn't depend on anyone's promise, that can't be printed into oblivion by desperate central bankers. So when you see stocks and gold rising together, don't celebrate. Run. Because what you're witnessing is the market telling you that the entire system is built on quicksand and the ground is starting to give way. The question isn't whether the collapse is coming. The question is whether you'll be holding real money or worthless paper when it arrives. Now let me show you what the smart money, the people who actually understand what's happening, are doing right now. And I'm not talking about retail investors or day traders. I'm talking about central banks, the biggest, most powerful financial institutions on the planet, the ones with armies of PhD economists, unlimited resources, and access to information you and I will never see. What are they doing? They're buying gold like their lives depend on it, because it does. Central banks purchased a record 313 tons of gold in the third quarter of 2025 alone. That's the strongest quarterly total in recorded history. Think about what that means. These are the institutions that print money. They can create dollars, euros, yen, yuan out of thin air with a keystroke. And yet they're trading that paper money for gold as fast as they possibly can. Why? Because they know something you don't. They know that paper currency is dying, and they're positioning themselves for what comes next. But here's what's even more revealing. It's not just that central banks are buying gold, it's which central banks are buying and why. China, Russia, India, Turkey, Poland, countries that are actively working to reduce their dependence on the US dollar, are the biggest buyers. They're diversifying away from dollar-denominated assets and into physical gold at an unprecedented pace. This isn't investment. This is strategic positioning for the collapse of the dollar-based global financial system. They see what's coming. They're preparing for it, and they're doing it quietly, hoping you won't notice until it's too late. J.P. Morgan's own research division is now forecasting gold prices to average $5,055 per ounce by the end of 2026, rising toward $5,400 by the end of 2027. Let that sink in. One of the biggest banks in the world, a bank that has every incentive to keep you invested in paper assets, is telling its wealthy clients that gold is going to $5,400. Goldman Sachs has a base case of $4,900 with risks to the upside. UBS is forecasting $4,900 by year end. HSBC says trading momentum could carry prices to $5,000 in the first half of this year alone. These aren't fringe analysts or gold bugs. These are the institutions that run the global financial system. And they're telling you in polite, sanitized language that the dollar is finished. But here's what they're not telling you in those research reports. Here's the part they save for their private wealth management clients, the billionaires and sovereign wealth funds who pay millions in fees. Gold isn't just going to $5,000 or $5,400. That's the conservative estimate. Because if the dollar loses its status as the world's reserve currency, if the petrodollar system collapses, if BRICS countries successfully launch a gold-backed trade currency, if confidence in U.S. debt finally breaks, gold could go to $10,000, $15,000, or higher. Not because gold is becoming more valuable, but because the measuring stick, the dollar, is disintegrating. Now let me show you what's happening on the institutional investment side, because this is where you can see the panic spreading in real time. The SPDR Gold Shares ETF, ticker symbol GLD, the largest gold ETF in the world, saw $1.6 billion flow in on a single day in January. One day. 1.6 billion. That's not normal market activity. That's panic buying. That's institutions and wealthy investors scrambling to get exposure to gold before the price runs away from them completely. Look at the broader trend. GLD has seen $23.49 billion in net inflows over the last 12 months. In just the last month, $3.09 billion flowed in. In the last 5 days, $1.09 billion. The money is accelerating, and it's not just coming from the United States. Asian investors poured in $3.2 billion in November alone. North America added $1.1 billion. Europe added nearly $1 billion. This is global. This is coordinated. This is what happens when the smart money around the world simultaneously realizes that holding paper currency is financial suicide. But here's what makes this even more significant. These ETF inflows are happening at the same time that physical gold inventories are being drained. Central banks are buying physical metal. Wealthy individuals are buying physical metal. And now institutional investors who can't easily store physical gold are flooding into ETFs as the next best thing. The total assets under management in gold ETFs just hit $530 billion, an all-time record. Their collective holdings reached 3,132 tons, also an all-time record. Every metric is screaming the same thing. The world is abandoning fiat currency and fleeing into real money. And here's the nightmare scenario that nobody in the mainstream media is talking about. What happens when the masses wake up? What happens when average Americans, Europeans, and Asians who are currently sitting in cash and bonds suddenly realize what's happening? What happens when pension funds, insurance companies, and retail investors all try to buy gold at the same time? The price won't go up gradually. It will explode, because there isn't enough physical gold in the world to satisfy that kind of demand. The vaults will empty. The premiums will skyrocket. And anyone who waited too long will be locked out, forced to watch their wealth evaporate, while those who acted early preserve everything they have. Now we need to talk about the geopolitical powder keg that's driving this entire crisis, because none of this is happening in a vacuum. Gold's surge to $5,000 is directly connected to the breakdown of the global order that's been in place since World War II. And what's happening now isn't just economic, it's existential. Look at what's unfolding around the world. The Trump administration is threatening tariffs on European nations over Greenland, a bizarre, escalating conflict that has NATO allies questioning American leadership. Iran is back in the crosshairs with Washington weighing military options. Russia and Ukraine are locked in a war that shows no signs of ending, with drone strikes now hitting near NATO borders. Venezuela is in chaos. The Middle East is a tinderbox. And underneath all of it, you have the slow-motion collapse of American credibility and the dollar's role as the world's reserve currency. Here's what you need to understand. For 50 years, the global financial system has been built on one fundamental assumption, that the US dollar is safe, that America's word is good, that treasury bonds are the ultimate risk-free asset. But that assumption is dying. When the U.S. government has $34 trillion in debt and adds another trillion every 100 days, when deficits are spiraling out of control with no plan to fix them, when political dysfunction makes it impossible to address any serious problem, the rest of the world starts looking for alternatives. And that alternative is gold. This is why central banks are buying. This is why BRICS nations are working on gold-backed trade systems. This is why even U.S. allies are quietly diversifying their reserves away from dollars and into physical metal. They see what's coming. They see a world where the dollar is no longer trusted, where American political chaos makes the currency too risky to hold in massive quantities, where the only true safe haven is an asset that doesn't depend on any government's promise. And here's the trigger that could accelerate everything: Fed leadership uncertainty. President Trump just finished interviewing candidates for the next Federal Reserve chair. Markets are pricing in 2 rate cuts this year, but nobody knows who will be making those decisions or what their priorities will be. There's an investigation into current Fed Chair Jerome Powell. There's speculation about whether he'll be replaced with someone more dovish, someone who will print even more money to keep the economy afloat. And every bit of that uncertainty drives more capital into gold, because gold doesn't have a chairman. Gold doesn't have a board of governors. Gold doesn't depend on political appointees making the right decisions. Gold just is. Let me deliver the verdict, because time is running out, and you need to understand exactly what's at stake. What we're witnessing right now is not a normal bull market in gold. This is the final warning before the greatest wealth transfer in human history. Gold at $5,000 is not the destination, it's the beginning. J.P. Morgan says $5,400. Goldman Sachs says $4,900 with upside risk. But those are the polite numbers they publish for public consumption. The real target, the number that makes sense if the dollar loses reserve currency status, if fiscal deficits spiral completely out of control, if confidence finally breaks, is $10,000, $15,000 or beyond. Because here's the truth that nobody in power wants you to understand. Gold isn't going up. The dollar is going down. Every currency in history that's been printed without restraint has eventually collapsed. The Roman denarius, the French assignat, the German mark, the Zimbabwean dollar, the Venezuelan bolivar, every single one. And the US dollar is on the same path. The only difference is that when the dollar collapses, it takes the entire global financial system with it, because the dollar is the foundation of everything. So you have a choice to make right now. You can stay in cash, in dollars, in government bonds, in paper promises that are being systematically destroyed by inflation and money printing. You can trust the Federal Reserve, trust the politicians, trust the system that has lied to you for 50 years, or you can get into the lifeboat. You can recognize that we are entering a paradigm where physical assets are the only thing that matter, where real money, gold and silver that you can hold in your hand, is the only protection against the death of fiat currency. Financial advisors typically recommend allocating 10% to 15% of your portfolio to precious metals, with total precious metals exposure capped at 20%. That's conservative, that's prudent. And that's what you should do if you want to protect your wealth without taking excessive risk. You can buy physical gold, coins, bars, bullion that you store securely. You can buy shares in GLD or other gold ETFs if you want liquidity and convenience. You can buy mining stocks for leveraged exposure. But the key, the absolute imperative, is to act now, before the masses wake up, before the vault's empty, before gold is trading at $7,500 or $10,000 and you're priced out forever. Because I'm telling you right now, as someone who has studied every currency collapse in history, as someone who has watched this pattern play out again and again, the patient is dying. The dollar is dying. Fiat currency is dying. And the only question that matters is whether you'll be holding real money or worthless paper when the music finally stops. Gold at $5,000 is not a peak. It's a warning. The dam has broken, the flood is here, and you are either in the lifeboat or you're going down with the ship. The choice is yours, but you need to make it now, because tomorrow might be too late.